The International Monetary Fund is giving Zimbabwe cautious praise for what it calls a regime shift in its economic management, especially the central bank's decision to stop printing money to finance government deficits. The country recently introduced a gold-backed currency, ZiG, in a bid to restore faith after years of hyperinflation and economic collapse. But despite these bold steps, the IMF isn't yet ready to approve Zimbabwe's request for a staff-monitored program, a critical move needed to restructure its massive $21 billion debt and reopen access to global capital. Why the hesitation, and what's still standing in the way? We have Dr. Prosper Chitambara, development economist, joining us for the conversation. Great to have you in.
Well, thank you so much for having me.
All right, a pleasure. Obviously, interesting commendation from the International Monetary Fund, a regime shift, they're calling it. But how much of a breakaway is this from where Zimbabwe is coming from, its economic past? Or would you just tag this a rebrand? Or are we actually seeing this backed by actual reforms?
Yes. There has been some reforms that the government is implementing. Of course, the pace has been a bit slow, but the country has been experiencing some measure of macroeconomic stability. It seems like we've managed to stabilize the inflation rate. We have managed to stabilize the exchange rate. The government has tightened its fiscal policy, but the central bank has also tightened the monetary policy. So the challenge now, obviously, is to sustain those kind of macroeconomic reforms as a way of ensuring a restoration of greater levels of confidence. So that's the first step. But of course, over and above that, there are still other institutional reforms that we still have to implement around, for example, even deepening the functioning of the foreign exchange markets. Ensuring there's greater transparency there, but also reforming our parastatals and our state-owned enterprises. We still have a huge arrears, public debt stock, which is estimated at almost about $22 billion, and the government has been struggling to pay back that debt. So that remains a major challenge. But we hope that as the economy begins to perform much better, this year we are expecting a rebound in terms of economic growth to about 6%, following a successful agricultural season. So 6% is still a bit inadequate given what we need to do, what we need to achieve, but I think that's a major improvement from the 2% that was recorded last year.
All right, so I mean, you're expressing quite a lot of optimism, and again, as you have highlighted, sustainability is key. But give us a picture of where Zimbabwe is coming from. How did they get here? Hyperinflation, a currency collapse. How did Zimbabwe get here?
Well, I think the major drivers of hyperinflation were unsustainable growth in money supply as a result of government running significant fiscal deficits, and those deficits having to be financed through monetary financing, through the RBZ overdraft facility, or through the printing of money. So I think that really sowed the seeds for the chronic inflation and the hyperinflation that we experienced. So now the government is trying to institute reforms to ensure greater levels of monetary discipline, but also greater levels of fiscal discipline, or in terms of public spending. So it's largely been as a result of unsustainable growth in money supply. Right. We've also had challenges in terms of our agricultural sector. So agricultural productivity and production for a long time was low. But of course, now we are seeing some green shoots of recovery in sectors such as tobacco. Like for this year, we had a bumper harvest of tobacco. We've in fact exceeded our target. We've sold rather, more than 300 million kgs of tobacco, which is a record. So we are seeing some positivities, but I think the pace of implementing key reforms around institutions and governance has been on the slow side. So we need to expedite that.
Indeed, we need to expedite that. But as you have pointed out, one of the things that has driven the reforms is the government stopping or bringing an end to the printing of money to fund the government. You have highlighted the need for sustainability, with such a move. But with next year, with elections coming up, right, do you see there being more spending pressures on the horizon, and do you see them backtracking, or can they sustain this move?
So in fact, we had our elections 22 years ago. So the next elections will be in 2028. So, but yet there are pressures on public spending, especially from civil servants. Government may award a salary increase. So obviously that could affect the fiscal position of government. But will also be affected by the US aid fallout, the dismantling of US aid, because we relied significantly on US aid funding, especially to fund our health sector. So this year we are going to receive much lower resources from America. So that's going to affect government fiscal position, because it means government has to take up a bigger chunk in terms of financing critical social sectors such as health as well as social protection. So major fiscal risk in my view.
Indeed. Well, IMF is recognizing these shifts and reforms, and obviously has, somewhat commended Zimbabwe, but they're still holding back. There's still some hesitation. What do you think they are missing? What do you think they need to see here?
I think the major issue has been our inability to clear our arrears. So I think that's been the biggest issue for them. I think we need, of course, we've cleared arrears with the IMF, but we still have arrears with the World Bank, with the African Development Bank, and also I think the European Investment Bank. So they're saying that we need to make significant progress in terms of clearing those arrears before we can begin to access a new balance of payment support. So it's largely as a result of our significant arrears.
All right, so the arrears. We'll come after this break to some of the help that Zimbabwe may be getting from those around it, like South Africa. Stay with us, it's still Business Edge. IMF, of course, has commended Zimbabwe and called a regime shift, but they're still holding back, not granting Zimbabwe's request for S&P. We have joining us from Zimbabwe, Dr. Prosper Chitambara, development economist. He, of course, has shared with us the need for Zimbabwe to clear its arrears, to get that commendation from the full commendation from the IMF. And we know that the Zimbabwe, I beg your pardon, is also trying to restructure or rework its debts and is seeking help from South Africa. Let us into how South Africa can come through with the framework, and what is in it for South Africa aside neighborliness.
Well, it's not yet clear whether there has been an agreement between Zimbabwe and South Africa, but yes, Zimbabwe has been seeking some bridging finance from friendlier nations like South Africa, but those efforts have not yet come to fruition. So, and again, it's not official communication from government, but we've heard that government may be seeking support for some bridging financing to pay back its most urgent debt. But those efforts are still, I think, being negotiated or being discussed. Nothing concrete has come out of that so far.
So no timelines, the probability of it coming through, any comment on that?
No, we don't know anything yet in terms of timeline, in terms of time frame. But I think these are probably negotiations that may be happening below the radar, so to speak. So they're not yet in the public domain, I think, in my view.
All right, we'll continue to track that and see what comes out of the talks. But we know that amidst the currency collapse, Zimbabwe has come up with a gold-backed currency, the ZiG. Let us into that and how much support that is gaining. Yeah, so the ZiG, yes, we've seen it has managed to stabilize over the past few months. There's been a bit of stability, and also even the premium is narrowed at about 20%, the power market premium. I think what the central bank has also done well is to increase our foreign currency reserves. So now we have about $700 million worth of reserves. That is both gold and also foreign currency. So that has helped, in my view,
in terms of providing cover, it's still inadequate because we need at least 3 months import cover, which is about $3 billion reserves. So we are 700 million. That's an improvement. Because in January we were at 550 million. So we've increased that to 700 million. So we need to continue to boost our foreign currency reserves because that's critical in terms of providing cover, sufficient cover to the Zimbabwe gold. But of course, the major challenge has been the confidence and trust issues in the local currency. So economic agents still prefer to transact and to store value in the United States dollar. But we're hoping that as we sustain macroeconomic stability, that should result in gradual improvement in confidence in the ZiG. But also importantly, there are certain products that are exclusively sold in US dollars, like fuel. So of course, with time, we're hoping that fuel should also be available in the ZiG. So currently, fuel is only sold in United States dollars and also passports. So if we open up those two products, and the fuel sector and the passport sector, we liberalize in terms of payment in both USD and ZiG, I'm sure that will also help in terms of boosting the demand for the ZiG and strengthening its value.
Indeed. So you're basically saying there may not be enough gold at the moment to back the ZiG, but there are prospects of it becoming a full-fledged currency, right?
The idea, yes. The idea is to have a mono currency by 2030, to de-dollarize by 2030.
2030. Finally, you have highlighted, I think, something key in this conversation has been sustainability. So let us into, finally, the concrete reforms that we need to see from Zimbabwe that could give the IMF an ear to lending its request for the SMP.
Yeah, so the IMF is saying that, number one, we need to further reform our foreign exchange markets to ensure that it's more transparent. We need to ensure that there's greater central bank autonomy. We need to reform our parastatals, our state-owned enterprises. We need also governance reforms. And of course, government has already agreed to a number of reforms around governance, around institutions within the framework of the structured dialogue platform on arrears clearance. So if we begin implementing those, I'm sure that will help in terms of ensuring that there's confidence, not just from the IMF, but also confidence from most stakeholders.
And perhaps, investor confidence as well, foreign investor confidence. But thank you once again, Dr. Prosper Chitambara, development economist, joining us from Zimbabwe.
Thanks so much for having me.